Hi, JJ here with The Art of Value. In this episode, Stanley Druckenmiller. He gave an interview with the CNBC at the Delivering Alpha conference not long ago. And he talked about the stock market. He was pretty bearish on the stock market and the global economy coming up for the next few years, actually. But we'll get into that. He was also bullish on a couple of things, so I'll get to that later in the video as well. Okay, let's get into it. Now, Stanley Druckenmiller is a very respected macro investor. He's done very well. One of the very few who's done well out of macro investing. In fact, over the last 30 years, he hasn't had a down year, which is pretty amazing. Now, I've read the transcript of this interview. Some of the key points he says the Fed was wrong. It made a big mistake, and he explains why. And he says the repercussions will be with us for a very long time. He also says that he'll be stunned if we don't have a serious recession in 2023. Druckenmiller says he wouldn't be surprised. In fact, it's his central forecast that the Dow, the stock market, won't be much higher than it is now in 10 years' time. That's a long time. But he's also wildly bullish on one thing, which I'll let you know later on, and he's fairly bullish on something else. So back in 2021, he said he was incredibly frustrated at what the Fed was doing, and I remember that, and I've made a previous video about Druckenmiller, which I'll link to in the description, and he says that he thinks that they're destroying 40 years of credibility by what they've done, this incredibly big gamble, and it's going to have big consequences. So he says they've blown 40 years of credibility with inflation. They've blown up one of the biggest asset bubbles he's ever seen, and he knows that some of the worst economies happen after big asset bubbles have burst. He points to the 1930s and also to Japan after their bubble burst, which they really haven't recovered from in 30 years. Part of the problem is, he said that the Fed did $2 trillion in QE after vaccine confirmation, and at the same time, the government had massive stimulus. He thinks it wasn't needed at the time that they did it after vaccines were confirmed, so that led to inflation, and it was more stimulus than we had during the whole financial global crisis. So he said it was way overkill. So it's not just that the Fed was wrong, he says, because he's been wrong many times. It's not that they made a mistake, it's that the risk-reward for what they did was too high. He explains that the risky bet they took was trying to get inflation up to 2% when it was at 1.7, and they did all the stimulus to try and get inflation up, just 30 basis points, 0.3%, but it wasn't needed, so they lost the bet. Okay, at this point, I'd like to ask you, if you're on YouTube, to give us a like if you were getting value out of this. That'd be great for the YouTube algo and for me. Thanks. But he says, of course, who lost was poor people in the US and middle classes, and he thinks it'll be felt for years to come. So it was a gamble that the Fed took, didn't pay off, and now everybody's going to have to pay. He said what was mind-boggling to him is that when inflation did take off a few months later, they came up with this ridiculous theory that it was transitory when it obviously wasn't, and Druckenmiller said this at the time. But they waited to see the whites of the eyes of inflation, and they got it, and then they just waited too long to act. So it took off. So he says the important thing is when you make a mistake to admit you're wrong and fix it. But he said they waited for months and months. They kept buying bonds and saying that it was transitory instead of admitting the mistake. And he said the repercussions of that are going to be felt for a long, long time, in his opinion. He reminds us that when Putin invaded, CPI was already at 7%, so of course it was the stimulus from government and Fed that caused it. It did say that it helped it along and escalated it, but it was already there, running high already. So of course that was the cause. And he says once you've lit the match, it's hard to stop the fire, and so he thinks it's a bit like the 1970s. Of course it took off and it's hard to stop. It's going to be hard to rewind. He doesn't think it's going to come down quickly. So about the stock market, he says we've got complacent about what long-term investing is as well. He points out that if you bought the market in 1929, it took to 1954 to get back to even, and if you bought it in 1966, it was about even in 1982, and of course there's a kind of a long bull market after that. He says the last 10 years of the bull market, where there's been $30 trillion of QE and down to zero rates, has put everything into hyperdrive. But now all that's going into reverse. There are consequences, and it's all gone into reverse. So he reminds us in the stock market, you can have 10, 15, 20 years of it not going anywhere. Not to say that you can't make money, he says, in markets like that. You can have 60% rallies along the way, but it's difficult, and just remember long-term can sometimes mean really long-term if you look at history. So what he's saying is that you can still make money in the market, but we've had 30 to 40 years of hurricane as a tailwind, and that's come to an end. And he wouldn't be surprised if the Dow wasn't much higher in 10 years' time. So about coming recession, he thinks we're in deep trouble. He said he wouldn't be surprised if there was a serious recession in 2023. He said he doesn't know the timing, but he'd be very surprised if it wasn't by the end of 2023. And he said he wouldn't be surprised if it was bigger than the garden variety recession. So he's not ruling that out. He's not forecasting that, but he's not ruling out that it could be really serious. His reason for this is because of what he's already said, the liquidity situation that we've had. We've gone from massive QE to QT, and it's followed an asset bubble, which is when you get serious consequences. This is all really pessimistic from him, isn't it? So that's his forecast. He said he thinks it's going to be a hard landing in 2023. He says he could be wrong. He's been wrong before, but he says he does it for a living, and this is his forecast, and we'll see what happens. So that's all really pessimistic. One thing he says that he is bullish on, is wildly bullish, is medical advances. So particularly cancer and neuroprogress, he says, however you define neuroprogress, but he's bullish on that. So the other thing he's mildly bullish on, he says he doesn't own Bitcoin or crypto, can't find a reason to buy it while central banks are tightening. But he did say that afterwards, because people will be not trusting of central banks, he thinks it could do fairly well in a renaissance afterwards, but can't find a reason to have it in his portfolio now. So pretty pessimistic from Stan, but he's had a good record, as I said, a very long and good track record. I think he's definitely one worth listening to, and I'm not going to invest by the macro, never do that. I look at the micro, follow Warren Buffett's advice of looking at the micro, but it's important to see what's going on, especially if we're heading into a time that he says it's definitely a possibility. I think it's happened before, right? The global financial crisis, and it's not looking great out there, but you just cannot predict the market. You just cannot, and that's what Warren Buffett says. You could do the opposite of what you think, and as Stan has said, he's been wrong before. So I'll just leave it at that. So if you like this video, if you're on YouTube, please think about subscribing, giving us a like, and if you're listening on another podcast platform, subscribe or follow, whatever it allows you to do, and I'll see you next time.